has fallen back 21%, now down. What in the world is happening?
The 2008 crash is not just a chapter in a finance book. It shaped the rules that still touch your paycheck, your rent, your loan, and the way your manager thinks about risk. When trust collapsed across banks, the world learned how fragile credit really is, and that lesson changed how money moves even on quiet days. Central banks built new playbooks for emergencies. Governments wrote new rules for lenders. Companies rewired hiring, cash buffers, and inventory so a shock would not break the business overnight. That is why you still feel echoes today when rates jump, when mortgage approval feels stricter, when a simple card limit review takes longer, and when your company pauses spending to wait for clarity. The message is not fear. It is awareness. If you understand what broke, you understand why certain protections exist and how to use them. Near the end, we will connect one quiet decision you make on payday to the same forces that pushed the world off balance, and that link will help you build a plan that stays calm when headlines turn loud. The crisis began with a simple chain. Lenders wrote risky mortgages, investment firms bundled them into complex products, ratings stamped them as safer than they were, and short-term funding made the whole stack feel weightless until it was not. When home prices stopped rising, defaults grew, trust cracked, and banks stopped lending to each other. That freeze spread through jobs, pay, and everyday credit because modern life runs on confidence that tomorrow's payment will arrive. The cleanup brought stricter capital rules for banks, closer stress tests, and new consumer protections. It also taught leaders to act early with liquidity and to backstop markets when panic rises. Those habits did not vanish. You see them in faster rescue moves during later shocks, in tighter checks when you borrow, and in the way companies watch cash flow like a vital sign. The lingering effect is a system that is safer in some ways and still delicate in others because leverage, incentives, and human herd behavior have not gone away. In the next part, we translate those forces into everyday life so students and workers can spot early signals and make calm choices before stress spreads. You feel the echo of 2008 in small decisions that happen around you every week. Lenders now test ability to repay more carefully, which means more documents, slower approvals, and tighter limits on credit even when your income looks steady. Landlords and employers also watch cash flow more closely, so renewals, raises, and new hires can slow when rates rise or headlines turn noisy. Cards change in quiet ways, such as smaller limits, higher minimums, and fewer automatic increases when spending jumps because banks prefer caution after what happened. Mortgages lean toward stronger stress tests, which makes fixed-rate choices feel safer for many households than variable rate options that can swing with the next policy move. Companies carry larger cash buffers and hold less inventory, which is good for stability but can mean delays on projects and slower over time during rough weeks. Student loans and car financing feel stricter because lenders price in more risk, not only your personal risk, but system risk they learn to see. None of this is a reason to panic. It is a map of how trust and leverage behave after a shock, and knowing the map helps you plan the path that fits your budget and goals. Early signals often appear before big headlines, and they are simple to spot if you know where to look. You might see more declines on fresh credit applications, slower responses on job leads, and managers delaying purchases that felt routine last month, which all point to a cautious mood. You might also notice banks trimming limits, landlords asking for extra proof, or stores offering more discounts to move stock, which are signs that money is moving slower. Your moves can be calm and small. Build a payday routine that sends a slice to future you first. Keep a light buffer in checking, and tidy any high-interest balances with a steady plan so debt does not compound against you. Lock key bills with fixed-rate choices when possible. Keep receipts and renewal dates in one place, and avoid big commitments right after a rate jump. Protect your resume with one visible skill project each month so options stay open if hiring cools. None of this blocks growth. It simply gives you steady footing while the system shifts under the surface, and that footing sets up the next part where we turn these ideas into everyday money and career habits you can run without stress. The safest plan is simple and repeatable. Start each payday by paying yourself first so progress happens before life gets busy and your month begins on steady ground. Use 3 light buckets for essentials, future you, and fun. So spending has clear lanes and surprises do not spill across your whole budget. Prefer fixed commitments where possible so rate swings do not push you off balance, and keep a small buffer in checking so tiny shocks never become big problems. If you carry balances, choose one debt plan and follow it with patience so interest does not compound against you when headlines turn loud. Keep receipts in one folder, review subscriptions once a month, and use a gentle purchase pause for wants that can wait because cooling off beats regret. For investing, stay boring and broad so one sector does not decide your mood, and automate small contributions so the habit survives busy weeks. Protect the base with simple insurance for the real risks and avoid leverage that pretends to be safe until it is not. These moves feel plain on quiet days, yet they are the reason your plan keeps working when the world gets noisy. Resilience at work comes from proof, practice, and people. Keep a short record of wins that shows time saved, quality lifted, or errors reduced, because clear outcomes speak when budgets get tight. Build portable skills that travel across roles such as data basics, clean writing, simple automation, and project flow that turns ideas into delivery. Share small updates with your manager so your value is visible and your next raise or opportunity has evidence behind it. Maintain a tidy resume and a friendly profile so conversations can start quickly if hiring shifts. Cultivate optional income with one tiny lane you can run after class or after work, because one extra stream reduces stress when teams pause spending. Keep a light learning routine that adds one useful skill block each quarter so your rate and responsibility rise without drama. Offer to write checklists and playbooks that make handoffs clear, because leaders remember the person who lowers friction when pressure is high. Stay kind, stay reliable, and watch early signals like slower approvals or delayed purchases so you can adjust calmly. A career that grows through shocks is built on steady habits that make you useful in any room. Headlines move fast and loud, yet you can read them with a calm filter that keeps you steady. When you see rates rising, remember that loans get pricier and approvals slow, so big choices feel harder for a while, and that is normal after a shock. When a bank reports higher loss reserves, it means leaders expect more missed payments and want extra padding, which is caution rather than doom. When you hear about tighter lending standards, expect more documents and slower yes answers across cards, cars, and homes, because banks want proof before they lend. When companies talk about cash flow and cost control, hiring and new projects may cool for a season, so you keep your skills visible and your plan boring and strong. When markets drop on fear, remember that broad and diversified investing works over long stretches, while quick moves often add stress. Keep your eyes on 3 simple signals that help you think clearly, which are the trend in jobs, the path of rates, and the tone in credit talk from lenders. These clues tell you how tight money feels on the ground, and they guide small choices that fit your real life. A short drill keeps normal life working when the world feels noisy. Keep key bills in a bills-only account so rent and essentials are safe, and let auto-pay handle due dates you can predict. Save logins in a secure place that your trusted person can reach if you are unwell so access is never a problem. Store receipts and policies in one folder and write a tiny note that lists contacts for your bank, insurer, and employer, because clear info beats stress. Keep a light buffer in checking so a late refund or a surprise charge does not break your week. Review subscriptions once a month and close the ones that lost their value. Use a gentle purchase pause for wants that can wait and give the idea a day to cool. Watch for scams that copy real brands during noisy times and slow down before you click. Protect the base with simple insurance for the risks that would hurt and avoid leverage that looks safe until it is not. Share the drill with a friend or partner so everyone knows the steps and then return to normal life, because a ready plan frees your mind for work and study. The crisis from 2008 changed how trust, credit, and risk move through daily life, yet your path can stay simple and strong. Keep the payday routine from part 3 so progress happens before the day gets busy. Use clear buckets for essentials, future you, and fun so choices feel light. Prefer steady and fixed commitments when you can, keep a calm buffer, and follow one debt plan until it is done. Grow portable skills that raise your value at work and keep one small income lane that you can run without drama. Read headlines with your new filter and watch the 3 signals that matter, which are jobs, rates, and credit tone. If they tighten, you tighten a little. If they ease, you ease a little. The goal is not prediction. The goal is a system that works on normal days and does not break on messy days. Save this script, pin your checklist, and run one tiny step today, such as renaming accounts or setting one reminder. Quiet habits beat loud promises. When the next scare appears, your plan will already be in motion and your attention can stay on the work and study that moves your life forward.